Hello everybody, welcome to your session for today. I hope you're all well on this Thursday morning stroke afternoon, depending on which part of Australia you're in. If you're in Victoria, sorry to hear the news. But let's see if we can cheer you up with some of what's happening in the markets for right now. A little bit of a smaller crowd than normal. Perhaps everybody's out buying toilet rolls. If you excuse the slight sort of pun. Anyway, let's get on to the session today. And of course, just be aware that this is delivered for educational purposes only. These are my opinions, not necessarily representative of Go Markets. There is some good news and some bad news, which we'll talk about in a moment, of course. But of course, remember that risk management should be a critical part of anything that you do and in any trading that you undertake. Just having a quick look through, see who's here. Let me know you can hear me okay, that would be great. Hey Rachel. It does delay my trip to Melbourne. Yes, David. Good, thanks Rach. Cheers you and cheers Steve. Okay, so let's get things kicked off, let's look at what's coming across the news today. Of course, US equities closed slightly higher in a low range session in trading last night. And US futures were trading near neutral when I put this presentation together, but they've since just dropped off a little bit. And Asian markets are now mixed following that US lead, cautiously up to start with, but look as though they're just struggling a little bit based on what's happening in the futures contract. US dollar index had a positive day yesterday, continued to trade around support, but did push higher and is higher in Asian trading today. We'll have a look at charts of all of this in a moment. And gold is paused at 1900 at that key psychological level. Markets like nice big round numbers, and 1900 is a nice big round number, and that's why it's stuck there. Cryptos are looking increasingly triangular, but holding established support. And maybe some of the caution today, both in the futures contracts and in some of the Asian equity markets, is due to the fact that we have big data out tonight after really what's been a quiet data week. We do have the US GDP and weekly jobs number out at around about 8:30 a.m. New York time, so that's around about 10:30 Eastern time, stroke 8:30 Perth time. So let's just check some stuff out and put a meat around the bones. Let's start with the futures contracts. So you can see that they've just drifted down slightly from that neutral open, and you can see that US dollar index back above 90 and moving a little higher. Very little else move in the currency markets. We are seeing a little bit of weakness in AUD and GB pound versus the USD particularly. Kiwi was obviously the outperformer yesterday on the back of that policy statement following the interest rate decision, which saw it spike against most of the major currencies, but really since then it hasn't moved at all. And so currency markets are stuck in this dreadful sideways trend virtually on every pair, and make trading long-term FX, using daily charts or 4-hourly charts, almost impossible to trade to make money unless you're really in it for the long term. Even the short-term opportunities are starting to dry up, and we'll look at that in some more detail. We did talk about this at last week's Inner Circle, which was sort of timely, but since then it's actually got worse. So we are seeing some movement in some share CFDs. Let's just quickly just have a look at CNBC.com to see what the Asian indices are doing. You can see very mixed. So we're slightly positive on ASX and China, and slightly down, following the futures down on the Nikkei and the Kospi. So that's where it's at in terms of the economic data. Really, it's all about this evening. You can see here we've got durable goods. We've also got, let's try, there we go. So we've got durable goods coming out. We've got pending home sales possibly one of the bigger or one of the more important housing numbers. And of course, we've got the big ones, the weekly employment numbers and GDP, which is the preliminary number, which is probably the most important number in terms of market reaction. So as I said, a big day today in the US, and so that may explain why things are paused over in Asia. So if we just look at some charts, just to put some context around all of this, we'll look at some stocks in a moment that seem to be doing okay. So there's the US 500 daily. So we had that big move up a couple of days ago, a little bit of a pause, a little bit of a move higher in yesterday's trading. So sitting comfortably above this 4180 level, but you can see we just pulled back a little bit. Let's just have a look at what's happened since Asian open. So you can see we started slightly positively and we've just drifted downwards over the last possibly 40 minutes or so. We seem to have found a groove, a range to trading. For those of you who trade, let's just pop that NDX on here, which is outperformed. You can see there's this is drifted downwards. There could be an opportunity here if it pops up around 13,680. But really, in terms of movement, there's not a massive amount. There's less than 40 points in this, so from top to bottom, got caught a little bit here and watched it bounce up and down since then, but quite happy to do that on a if you put it on an hourly chart, you can see in more detail why it's in such a tight range. Okay, so US dollar index, as I said, it popped yesterday, reversing the losses from the previous couple of days. Slightly higher in Asian trading, but only just so. We were actually higher earlier on. So we're just getting a drift downwards in everything while some money comes off the table. Look at gold. There's that 1900 level we put on the chart. Failure to break through yesterday. Failure to hold the breakthrough yesterday, and saw us sort of trading back down below it for right now. So the gold bull's taken a little bit of a break. If we look at cryptos, as I said, looking at pretty about as triangle. This is a great textbook symmetrical triangle that we're seeing here. Let's just get rid of the object. In fact, let's get rid of all the objects. There we go. But we can draw a line here and a draw line here, and that's about as symmetrical as it gets. But this 200 MA is quite important in terms of cryptos, but certainly there seems to be no appetite to buy back in right now, which is unusual once again, because every time we've seen a dip, we've had some buying come into it. So we're not seeing that right now in cryptos, which sort of suggests that the enthusiasm has dampened a little bit. Copper's trading neutral. So let's look across some of the US dollar pairs to start with. Looked as though we're going to break to the upside on the euro. That 122.36 has been in place now for 7 trading sessions as a short-term range. You're going to see this time and time again on the FX chart. So you have got some opportunity to trade in between these two levels, but it's only 53 points on a daily chart, which is just staggeringly low. You can see the ATR dropping off, volatility is dropping off with all of these Forex pairs. So although the candles are quite large, there's actually not much movement here. So that's choppy rather than volatile, I would suggest. If you look at the US yen, trading mid-range again, not much. 100 pips from top to bottom in this. But if you look at the hourly chart, where those two lines are, even if we look for a potential trade over 109.20, we're still only talking about 35 pips, and that's if it does make its way all the way up there. To the downside, I wouldn't touch this with a barge pole, simply because there's just too much noise here, too hard, unless you're trading 5-minute charts, perhaps, to try and scalp some pips with a larger position. It doesn't look compelling at all. We mentioned the Kiwi yesterday, that Kiwi did well against most of the currencies, but again, if we look at context, this is probably the best placed of all of the charts at the moment. So we see that move up yesterday. We gave up some of the gains to fall back to that resistance we've had on this before at 72.80. But you can see in Asian trading, we're just starting to pull higher again. That's fairly recent. Okay, so that's, let's just put it on the 15-minute chart. You can see how recent it is. So it's in the last hour. So we actually moved down in Asian trading beneath that key level and then moved higher. So this is important now. Are we going to get potentially some more buying in here? If we do, again, it's not massive in terms of a potential return. We're sort of talking 14 pips, 19 pips to test that upside. It would make sense if you are interested in this to wait until it's broken that, and that will confirm some momentum coming back into it. But again, you can see the last sort of hour or so, we've really sort of pushed higher with some vengeance. I share your pain, Peter. Not a good combination. Lockdown and useless internet is really not a good place to be, so I empathize completely, mate. Hope you can hang around for a little bit. But you can see here that 72.95, let's call it 73 as the level to get interested in for a really short-term scalp. But again, I would be putting my, I wouldn't be trading that. I'd be looking really sort of for a break of around about 73.15, let's say 73.20 once it breaks through that. That would make sense technically. Obviously, we had that big move yesterday. Look at the hour chart. There it is. There is the follow through. So that was within an hour. There's the next hour. But since then, we've just drifted down. So no appetite at all for trading this. Now, if we look, interestingly, we dropped about a third. Okay, so we retraced about a third from our highs. So this is a 30% retracement we've had here. And so we're seeing if we've got some further momentum. Again, nothing much in this till we get to retest that level. GB pound USD, look at the volatility on this. Really, this is about as low as it gets on any currency pair, and this is on a daily chart. So normally 84 pips, we'd be looking really 84 pips as a good trade on an hourly chart. This is on a daily chart from top to bottom. So we've only got, even if we drop off, which we could do, and we are testing a short-term support again for you guys who trade short, really short-term. This does look sort of interesting. I can just drag it down a bit, but again, just take it out a little bit. So let's say we enter possibly around about this 140.87. We're looking at around about possibly 57 pips to the downside. So if we get some more USD strength, that could be worth a look. But you can see we've had a bounce off that level already in the last 45 minutes. So again, it doesn't look to be a compelling reason to break through this at all. Look at the New Zealand yen, very similar to New Zealand USD, but we are seeing this move slightly more positively than perhaps the USD. So we can see there's Asian trading. We are trading towards the top, and we're not far off the pivot high from yesterday. So there's the breakthrough on just about one candle. Now here's the level of interest at 79.60. This is going to be our FX chart of the day. In fact, we're going to move it to the 30-minute chart. Just because I think we need to be nimble in this. So that's why I'm going the shorter time frame. So not far to go on that, about 6 pips till it gets to that level. You'd probably add another 5 pips, that'd be half an ATR. So possibly be looking for an entry at around about 79.64. That would take out all of these wicks. Okay. So there is our chart of the day. So the Kiwi yen 30-minute chart on a break of 79.65. Okay. One other to have a look at, which is of interest, is the Aussie Kiwi. Now, if we put this on a long-term chart, you can see that strength yesterday. Really hard to flagging a support with this, but the best we could do was come up with a support at around about 106. So you can see it was important here and here. Had a brief foray through it there. Even if we take it right back on this daily chart, you can see there's a little bit of price action around this historically. Bring it right up to where we are now, put it back on the candles, and you can see how there was the yesterday's candle, there's today's candle, trading towards the lows of the session. So again, if we put this on a chart, so I was flicking between this and the Kiwi yen as the chart of the day. So really that would represent a low we haven't seen for quite a while, just because there's a better landmarks on the Kiwi yen. That was part of the reasoning behind that. A little way to go on this, around about 8 pips till it hits, and then you've got an ATR of around about 8 pips, so probably another 12 pips before you consider a short entry technically. So that is another one possibly to keep an eye on but nimble is the key. You're going to be trading short-term time frames, not getting greedy at all with profit. So you'll be placing your stop somewhere sort of around about where that 20 EMA is. So no more than 17 or 18 pips on this if you were trading a short position. Worthwhile looking at the Russell perhaps, which has sort of underperformed the rest of the indices, but you can see there we've got something that looks a bit like an ascending triangle. Sorry, I forgot to do this earlier. We can see that is interesting. So higher lows and stuck at 2250. So just watch that over the next couple of days or so, and possibly when that data gets released tonight. There could be a sharp move up in that, and as I said, that has underperformed some of the other indices in the US. Okay, let's quickly flick on the ASX 200 and see where we're traveling. Comfortably above 7,000. You can see we're challenging that 7,100 level, which now is a fairly well-established resistance. So I've had several attempts to smash through this without success. There we go. But you can see even in today's trade, we're starting to retest this again. So we'll get good data tonight. There could be an interesting move on this. So let's just quickly peek at what we're doing on that. So give me a second just to flick screens around a little bit. And we'll have a look at the overview stuff, and then we shall and then we'll have a look at a few charts in a bit more detail, because as I said, there's a few that look as though they are moving and grooving. So there we go. You can see we're just above that 7,100 level, 0.14% higher. So not anything to shout about at all, but on the positive front, we are actually towards the highs of the day. You can see advances, decliners, it's about 50-50. We've got some obvious sectors doing well. If we look straight away at resources, we've got some buying coming into resources. They've been smashed over the last couple of weeks or so, and this is despite copper being relatively neutral. The banks are sort of mixed, not breaking any records, but we can see BHP up there over 1%. Banks are up fairly close to neutral. If FMG are up, Oz Minerals, if we scoot down here, sorry, I overshot a little bit. There's Oz Minerals up nearly 2%. So all of those are looking pretty good. Pilbara Minerals up. But PLS, that's a good move on PLS. We'll have a look at a chart on that. That is the lithium play that we've talked about before on with Galaxy. We actually didn't have a look at that before. We did have a look at a Galaxy chart. You can see Qantas is flat tack, but off the lows after that news out of Victoria. That's not going to help any travel stocks at all. And then if we look at our business finance stocks, we've got Xero up, we've got Zip up, and we've got Afterpay also in positive territory, as you see there. Only just, but again, look at what's happened to Afterpay today. we smashed down early to around about 91, and then we just gained all of that back over the last little while. Healthcare, not a good place to be at the moment. Not helped, of course, by if we look at Fisher and Paykel, they're getting marmalized at minus 8% down on the back of a report. Interesting. Flight Centre up 2.5%. That's it. Very interesting. Okay, so let's put some charts on here. Let's look at Galaxy first. Galaxy were one I spotted straight away. We talked about this the other day in terms of this being a potential bounce. We've got confirmation of that, so we were looking at a move above that 362 level when we talked on Tuesday, and it is broken through. You can see, and again, just to disclose, that's where we're at. So we enter earlier on today, and you can see where it's sort of gone, and it's just looking to continue to move higher. If we look at PLS, which are the other mob in this space, you can see again a really strong move today. Should see us potentially push forward. Could test, though. I mean, look at the price of this stock. So it's only 120. So even a 10-cent move is worth 8%. So both of those are looking pretty positive. Galaxy, I would say, is probably the slightly stronger from a fundamental point of view, but both look as though they're an interesting place to be right now. If we just carry on looking, LYC, again, we talked about this before. In fact, we talked about this on Tuesday. We suggested this was a bounce happening. There's Tuesday. Didn't enter this until today, but you can see there, again, if we look to the next resistance, we're up 10, 11%, and this seems to happen every time with this stock. It goes up that 10% and then drifts down, up that 10% and drifts down. So this could be an important move, but probably a fairly aggressive trade on that bounce, but nevertheless, no doubt at all that that bounce is now in place off the support, done exactly what it did here as well. So that is not an unreasonable technical idea in terms of where it's at. Oz Minerals, we talked about resources. This is purely a bounce. You can see it's not breaking a record. It's not past its high of yesterday, so too early to be considering a position here from a technical point of view. But 23.38, sorry, 23.38 looks like value. $24 looks like value. But from a technical point of view, really that's the level to get interested in, is around about this 24.66 level. So that will be resistance here, support here, resistance there on its way down. If we look at BHP, as we said, looking higher, but this has been pretty decimated as well. We look at the daily chart, so it would look as though we're finding. We talked, I think, on Tuesday about this $47 level, but important. Put it onto the candles, you can see there's the potential bounce. So we're getting a little buying in oil, a little iron ore stability. Copper isn't selling off anymore, so perhaps the market's looking at these and suggesting that maybe a little bit oversold. If we just pop an RSI on this, just out of interest. There we go. No, didn't reach oversold on the RSI, but nevertheless, that's perhaps what the market's feeling, and maybe enough is enough already, because the drop has been significant on BHP from the highs that we hit not too long ago, 3 weeks ago or so, but we've dropped down best part of 10%, which is significant. So TWE were another one that they've expressed an interest in, and again, you can see that there. So there was a breakout on Tuesday. I think this is our chart of the day on Tuesday. A little bit of a doji yesterday, pretty neutral today, but still holding up okay. You've got a target on here of around about 1175 in the short term. And again, that's not, in terms of percentage terms, it's not shabby. It's around about 3.5%. But if we do, it's a sort of trade, it's a really good example of a trade you may accumulate into. So if we break this level here, okay, let's say 11.85. The next port of call is around about this 13.10 figure. And once we get up to there, then we'll look into gap fill. So remember, pre-pandemic and pre-Chinese Chinese games, we were up at $18 on this stock. So we have a fair way to go. So the market's obviously seeing some value in this, really since the beginning of the month. So possibly not a bad long-term play, which is sort of my view on this. Any others in this space you want me to have a look at? I'll just pop up a couple while you're thinking about it. JB Hi-Fi. Been keeping an eye on JB Hi-Fi because it's sort of been trading around just underneath this this resistance. So you can see it's broken through the 200 MA, so it's in quite a tight range of around about $1.50 or so. So we're still keeping an eye on this. Being patient is critical. And the other one that we had a look at was Wesfarmers. So Wesfarmers have really, this is one we had a look at on Tuesday, and really didn't like this because very little upside in percentage terms. So you'd have to enter quite a large position for a $50 stock to get 1.5%. So that we scrubbed that one as one of interest, and may look at it if it breaks 56. But still, you can see it's just stuck. Far better charts than this kicking around. Just pop a zip chart on, just for interest. So you can see we're waiting for this. Less compelling, perhaps a little bit, than Afterpay. So there's Afterpay, just playing around this sort of $95 level. That should take us to retest this. So you can see we're going for about an 8% gain on this, taking us up to that 200 MA, and then we'll reassess. That's almost sitting on $100 right now. And also put on Xero. I don't think we've had a look at Xero yet, but there's Xero, and Xero are really interesting. If we get a close here, this is the highest close we've had really since, for at least a couple of weeks, and looks as though we've got this. So we had this major drop down right through the 200 MA. This was the one we talked about last week. This is our chart of the day last Thursday, and since then we've flatlined a little bit, but this is a very compelling candle over 130. We talked about this being an important level previously, so that's where it's at. So we talked about 129 being a key level. We're at 130 now. So again, if we look at potential upside on this, we're looking at around about 10 or 11%. If it continues its way up. So certainly some compelling reasons to get into some of these stocks following the retracement that they've had. But we are going to plant our flag in LYC as our ASX chart of the day, up to around about $6. That's of interest. Now, if we pop to the US, Twitter was one we talked about on Tuesday, got very excited about it. If it broke 55, and sure enough it did. So that was Monday's trading that we talked about on Tuesday. Since then, we've had a little more of a move up, and so now we're suggesting that just watch that move about 2% higher, breaks that, and we could be up that 8.5%. So it's difficult to look beyond this. We did also have a look at PayPal. This is our US. This is our US chart of the day. We mentioned this again on Tuesday, with 260 being a key level. You see how it was the confirmation point on that double top there. That looks reasonably interesting and close towards the high of the session yesterday. Any follow through in that? And again, we're sort of looking at a very acceptable sort of 6% up to retest those previous resistance levels. Outside of that, in the US, we're still keeping an eye on airlines. If we put LUV up here, you can see very choppy. So no, we're staying away from airlines in the US for the right now until we get some clear movement. We also have been keeping an eye on the semiconductor space. We like Micron, and you can see we've had a reversal, quite a nice reversal pattern there. Looks a bit like a skew with double bottom. And we would suggest that this level here is one of importance. Had a test intraday without support here, had a little delay here. So this level that it's trading at now at around about 86.37 is one of interest. But if we do get a break of that, then really again we're looking possibly at around about a 6 or 7% gain on that. And let's look at INC, which is another one we mentioned. This is an important level we're trading at on INC because you can see there is the 200 moving average right bang smack on where we're at. And also, interestingly, the 200 MA and the 20 EMA are both at the same level. So if we get a further move up on this, we could get the 10 EMA crossing over both of these, and the market would view that as being quite bullish, I would suggest. And then we could again see a gap close around about 6 or 7%. So there's some ideas for the US market for you to have a look at. Just quickly popping through. Right. Hugh sent a message about Ramsay takeover of Spire in the UK. Will this be any effect on Aussie share price and div, to your knowledge, of previous overseas takeovers? Good question, Hugh. So Hugh's question is there likely to be any impact on, generally speaking, when Aussie companies take over in international companies? Well, much will depend on whether the market perceives it as a value add or not. So if we look, because obviously they're spending a lot of cash on this. So if we look at Ramsay, I'm not sure when this news came out, but if we look at, let's actually put the right chart on. But if we look at Ramsay Health Care, there's the market response to it. I'm guessing that was released overnight. So what we would normally expect is a knee-jerk market response based on whether the market feels that it's a good add value or not good add value, and whether in terms of the business as a whole, but also they'll look at the price paid for any overseas companies and make a judgment on whether that's a fair price or perhaps overpriced or underpriced. Generally speaking, the market tends to believe that any takeover is usually overpriced. And usually that isn't unusual, simply because that often you have to pay above book value to get the deal over the line. So that's possibly why we're seeing that down move in Ramsay now. What that means long term is difficult to judge, of course, but the best call is really just to see what the market response to that is. Now, obviously, we've got that big move today, which is, what's that in terms of yesterday's close? That's not massive. It's only about 3% down, so that's not huge. But if we do get further selling into that, then that potentially could mean a few days of such until the market prices things accordingly. So the other factor that the market sometimes take into account is the cash flow of the company. So generally speaking, companies who have good cash flow are very popular with the market. But if cash flow is impacted on significantly by any M&A activity, then that in itself is going to make the acquisition unpopular. But that's not dramatic. That 3% is not dramatic on an acquisition takeover. So that might be just initial market rejerk rather than a standard response. Interestingly, we do sort of see that is it was actually pushing up along with a lot of this sector to tackle its 200 MA. So it's maybe just dampening the market's enthusiasm. So really what I would do with Ramsey, look at that 61.56 level. If it starts to tackle that with any sort of interest, then you can see how important that level is historically. So this will be, if it breaks that from a technical point of view, it's just reinforcement that it's an unpopular move as regards to the market is concerned. So bottom line is that there's a few factors there which determine whether it's good or bad in terms of the market. Fundamentally, it's really difficult to comment on in the long term, but always look at the initial market response. But as importantly, the next move. Okay, you're always going to get a knee jerk, but thanks for bringing that up. That's really useful. So just looking through, see if we've got any other. Any other things that you want me to have a look at, guys? So just to reinforce, we like New Zealand yen as our FX chart of the day. And we give you a level that may so it's a breakthrough that plus half an ATR, so that 79.64 on the stocks front. XRO look very interesting if we close above this by let's say $1. If we close over 130, we'll be interested. But both LYC and Galaxy, we like both of those for the move they've made today, which confirms a bounce is in place. Just have a quick look. I think we've good man. I mean, like anything. I mean, if we just pop. If we just whoops. If we just pop Galaxy on here. The nice thing about trading a bounce sometimes is that you do have some really nice lines in the sand. So we've got a clear, I mean, I would suggest that really the evidence of a bounce is this, okay, is this candle here. So we had some little candles here which didn't really take out this bar here, but we have got that now confirmed. So that's the V-shaped bounce confirmation of that. So in terms of a trading idea, what I would say is, look, if it starts tackling around about this 345, it's going south. If you really want to hold this for a little while, then you could go down to 330 as your stop. You might want to get careful, really sort of trail that profit target up to trail that. So the way this might work is if we make this red, just so you can see, bright red, there we go. So that's where we might start. If it breaks this level here, we'll move it up to break even. So if it breaks this level here around about 394, we'll move the stop up to break even, and then we'll move that. If it hits this level here, we'll trail the stop real tight, possibly up maybe even 8 or 9 cents below that to see if it breaks. So if it doesn't, we're quite happy to rip that off and then see if it breaks this next level. Alternatively, we could set a profit target here and then just accept that we're going to be taken off there if it gets up to there, and then keep an eye on this and see if it breaks that next level. So there's a couple of ways you can play the profit game, but certainly trailing would be a good thing to do on this stock. So but we'll keep on. We'll just keep on. Just keeping on creeping up here. And as I said, we are towards the highs of the session on that. So yeah. So I don't mind sort of telling you about. It's really important that when we, because it's not just about entry, and that's what we. That's one thing that I want to make sure I keep doing for you guys is not only saying, hey, well, look, this looks interesting, looks like a change in sentiment, but also talk about some of the risk management associated with it, because that's obviously as if not more important in terms of your exit. So when I talk risk management, it's not only risk to the downside, but also managing profit risk, which you talked all about last night in the Inner Circle session. If you didn't make that, then let me know and I'll send you a recording. Just one more thing in terms of tonight, we've got share CFD session. If share CFDs are new to you, or you want some more information or a revision, then there's a session tonight at 8 o'clock Melbourne time. Let me just get the link pasted into chat. So it'll be great to see you along there. So if you want to know how to get on board with that, get the free course, get a demo account using US Share CFDs, then that should all be good. So I'll put that into chat now, so you can access that if you're not already enrolled. Not a worry, Peter. Just drop me a little email. I'll sort that out for you, buddy. Okay, guys. Well, look, take care of yourselves. If you'd like just quickly a quick straw poll of those who are here. Melbourne's obviously still going to be in lockdown. If you'd like an extra session put on Monday around this time, quickly type in yes into the Q&As, and if there's enough yeses, then I'll consult with the powers that be and make that happen. Right, okay, there looks to be a heap of yeses. Well, yes, there is a heap of yeses. Good stuff. Time tonight is 8 o'clock, Peter. But if we'll see you there. You should get a reminder email the other time. Anyway, look, guys, I'll rock and roll. I'll see you guys later. Take care of yourselves and be safe. Bye-bye for now.